compared to like October of last year, you're like a whole different mindset. All these things that were so suffocating for anyone in this market that wanted to be based here in the US, and that's all changed. And I think you're going to see some amazing innovation coming in the next 12 months. I mean, we're seeing it in our deal flow right now.
Ladies and gentlemen, thanks so much for tuning into The Scoop. I'm your host, Frank Chapparo, and we have a very exciting episode of the program for you today. Hopefully it can take your mind off the carnage of the markets. We're going to think a little bit more long-term, as venture capitalists often do. We have two joining us on the other side of the mic. On the other side of the mic, we have Mark and Latif from M13. We have a fun show for you guys. Obviously, M13 has a strong reputation as a generalist firm. They back companies like ClassPass, Ring, and Lyft, and have been in crypto since 2019, so they're quite active there. But before we dive in, I just want to take a quick minute to thank the people who keep the lights on at this office and my home. Let's get that started. Uranium.io, an entirely new marketplace for trading uranium and powered by Tezos technology, is live. As global energy demand rises and nuclear power becomes a key player in decarbonization, demand for U3O8 is increasing. But up until now, its access to retail investors has been limited. Unlike other precious metals like gold or silver, the traditional uranium market has high barriers with minimum lot sizes of tens of thousands of pounds that's limited retail participation. Tokenized uranium breaks these barriers, enabling anyone to own physical uranium with accessible pricing and no need for complex storage. Investing in uranium is now widely accessible, and you can learn more at www.uranium.io. For crypto and DeFi professionals looking to contribute to a team committed to innovation in digital assets, Fidelity Investments is now hiring. Why Fidelity? For starters, they've been exploring Bitcoin and blockchain since 2014. They were the first traditional asset manager to launch a native crypto business and among the first to launch a Bitcoin exchange-traded product. Innovation is in their DNA. Fidelity invests in their talents by supporting and developing associates through continued education opportunities, casual crypto-focused discussion groups, and on-the-job experience of working with new technologies. If you want to work on cutting-edge products and explore the new frontier of DeFi and blockchain, Fidelity is for you. Their products continue to improve and evolve, staying ahead of this rapidly changing digital asset landscape. So go ahead, explore Fidelity Crypto Careers today by going to crypto.fidelitycareers.com to learn more. That's crypto.fidelitycareers.com. Fidelity is an equal opportunity employer. Hiring in crypto and digital assets is hard and can be expensive. Resumes and interviews don't always spot the gaps in knowledge. Campus changes that. Campus is the Block's new pre-hire assessment tool that is able to verify a candidate's expertise so you hire with confidence and avoid costly mistakes. Smarter hiring, stronger teams. Campus. All right, gentlemen, thanks so much for taking the time to join the show. I know that we've been planning on this for a while, and obviously each week seems to bring its own hope and despair as it pertains to the price of liquid tokens. But before we maybe get into the sentiment of the market and maybe how that's impacting stuff on the private side, let's just walk through M13's journey in crypto and what initially drew you to the market, and how does it interplay with other segments of the firm?
Thanks, Frank, for having us on. I think Mark and I will probably ping pong this over the course of the show. But M13 is an early stage bi-coastal VC fund. We got into crypto back in 2019 when I joined the firm. I had previously worked at Virgin Group, and we had been spending a lot of time in Bitcoin and then Ethereum. And when I came over, actually the first deal we did was in a company called Lightning Labs, which is obviously building on Bitcoin. And since then, we've continued to evolve our thesis and have worked across many blockchains and invested across the stack from L1s like Bitcoin and Solana, and emerging ones like Saga, all the way to applications. And so the journey to get into the market, you start small, you convince your partners this is an interesting area potentially to explore. And as we see, we continue to build our domain expertise, and we continue to see better and better deal flow. And honestly, we see tremendous performance from our portfolio. It's an easier and easier sell, and now it's a very core part of kind of the firm and how we think about emerging technologies shaping the future around us. So it's been very exciting to see the firm grow and become a real player in the crypto market.
I don't think we've had a generalist VC firm on the program since they were all investing in FTX in 2020, 2021.
I will say, it's interesting you bring that up. It's
That might be actually factual, by the way.
We're still standing.
we'll take that we'll take that honor with pride. I would say what's interesting is, like, all the stuff happening in AI, which we see and are very excited by and we invest in, is really, really exciting. Of course, I think if you think about, like, if there's 100 smart VCs in the world, and like 70 of them now are only focused on this new thing, which is really exciting, and leaves 30 that are focused on what we also think is a very exciting market, but maybe not nearly as consensus. That's actually a very interesting place to be as an investor, because um you know we can focus in more closely. There's less competition, although obviously there's a tremendous number of great VCs in the crypto market. But we like being a generalist firm. We take inspiration from other technologies and industries, and we love to continue to apply some of those learnings as we think about how do we scale crypto.
Mark, we've had a lot of non-generalist crypto native firms talk about how crypto firms will ultimately become generalist venture firms or liquid funds as well over the next 5 years. Do you agree with that sort of thesis?
I think there's a good amount of validity to that. I think over time, you may start seeing these markets, the crypto specific market and the non-crypto market, sort of converging. Um, in many ways, like we think about when diligencing a business, like the same process you'd use to look at like a Web2 company, like should for the most part apply to how you look at a crypto company, and vice versa. Of course, there's like specific nuances and aspects for crypto around like dealing with liquid tokens and in a more liquid market that I think takes a good learning curve to get through. But over time, I think we'll probably see like paths probably converge to a good extent.
How does it feel internally within the firm? Like, does it feel like these are two different worlds? Or to your point, I mean, the types of parameters around which you're investing are relatively similar?
I would say like each incremental year that passes on, or each incremental month and cycle, like there's the similarities increase, and the incremental crypto deal you look at doesn't look too dissimilar from like the incremental web 2 deal, right? Like they're all, at the end of the day, we're dealing with early stage businesses here. There's a lot of unknowns, but I think many of the frameworks I use still kind of apply. And I think, internally there's been a strong amount of buy-in and support for the strategy as well.
I will say, though, that, like, the liquid nature of stuff makes it, you know, can you swear on these shows? Probably not, but
Yeah.
it makes it more of a head. We'll call it a head F. You know, when you've got a business and it's like doing well on all its key metrics that we've kind of discussed with them, and yet it's down 70% because we've got tariff issue, or rates aren't where they were meant to be. Like, yeah, that's like a little bit tougher to swallow. But if you've been doing it long enough, you get used to that. It's all kind of trending in the same positive direction longer term. And honestly, as an investor, you're still playing a multiplayer game. Like, we have a lot of portfolio companies, and we can kind of manage that. And thankfully, we have LPs, and the partners of the firm are all very long term thinking. But I do think it's an issue for entrepreneurs, especially younger entrepreneurs. Like, you're basically playing a single player game for the most part, and like dealing with building a company and dealing or a protocol and dealing with like the value of my net worth and the overall market is just very, very challenging, I think, as a just core bug of the business.
Yeah, and it's a bug for the investors and also for the founders as well. When you think about some of the companies that you folks have invested in, like Lyft, it took however many years. I think it was like 7 or 8 before they went public. They operated, whereas that timeline for the average crypto firm is, in some cases, less than a year, where they go from idea to having a liquid, effectively representation of the value of the entity out there. So that's like it's a lot to take on as a young founder, is being effectively answerable to public markets. And I feel like the onus is on venture firms to help them navigate that.
Yep, absolutely. It's interesting you bring up Lyft because one of the interesting things about crypto is that's an amazing feature of the fact that this technology is also financialized is that you can bootstrap networks really effectively. And so we're investors in a company called Hivemapper, which, as a side note, you should have Ariel on your show at some point. He's a fantastic entrepreneur. But, the cost of building Hivemapper into what is, I think, one of the most exciting mapping companies in the world today is a small fraction of the cost of what it took to build like a Google Maps, and that's because you could incentivize, people with tokens, and now they have this thriving global community of drivers who are, helping them build the best, freshest map in the world. And I think if you looked at some of their ARR numbers with great mapping customers and enterprises as their customers, we can't really disclose any of that stuff right now, but it would make any Web 2, investor blush at the growth and the traction that they have. And so like there's some really interesting innovation happening here. And again, the token becomes a bootstrapping mechanism, which brings down this capex in a huge way. So I think that's a really exciting development we're seeing in the market right now.
It is a good bootstrapping mechanism, but almost the speed at which it helps bootstrap something, it can just as quickly unbootstrap, I guess, to use a lack of a better sort of analogy there. With that, I mean, you kind of live by the token and die by the token, whereby everybody wants to try this shiny new thing because they think it might result in more tokens in my wallet. And then once the value of those things go away, so too do the
Yeah.
users. And often on this program, we use Steppen as a great example.
Well,
Because I think that, millions of people flocked to this thing, and it became like the zeitgeist.
we were. I mean, you may. I don't know if you were aware, but we were early investors in Stepit, and so
Yeah, and so it was like, very
yeah,
smart for folks like, Mike Dudas. And
yeah.
listen, I was using that thing every day. I had like 7 sneakers. I just think it speaks to this phenomenon. It's like, how do we get sort of more stickiness that's less correlated with the price of tokens?
Live by the token, die by the token. I think there's been a precedent of just launching tokens in the past, rushing them into the market just to get some like liquidity into the hands of the team or the early users, which is great, but oftentimes leads to a slow bleed out, which I think just like raises the bar to figure out how to incorporate your token in a way that's more like fundamental and necessary for the actual business model, right? And like not separating the two, and thinking about how you can actually incorporate it into the fundamental business. And that's a hard challenge, right? And there probably don't need to be, I don't know, the latest number, like 10 or 15 million tokens that are currently listed on CoinMarketCap right now. So that's but that's a fun challenge, I think.
But you gotta play long term games with like long term people, and I think if you I think the founders of STEPN had all the right intentions. It just was a very complicated two token model, and yeah, it had this kind of like huge rise up. But there's an opportunity for someone to figure that out. Now, if you look at Mapper again as like a parallel in the deep space, it's a single token. It's the same token that is the drivers are earning, that the investors will have, that the team has. And I think the unique thing actually even Stepin, but really about Mapper was that basically you're incentivizing what's already a very passive behavior. So like drivers are going around, an Uber driver is driving his Uber regardless of whether or not they have a dash cam on their car. And so like having a dash cam that then uploads data to the cloud that they can use to refresh this map, even if the amount of tokens you earn over time goes down because it's not as needed, it's still like it feels like a behavior that people will buy into. And I think Ariel is a founder that when you talk to him about, his tokens and what he plans to do, I mean, the guy's just a long-term holder. And so I think there's things that, you look for in entrepreneurs, and again, the next generation of entrepreneurs are going to look like that, which is like, hey, we're not coming into crypto because it's cool to launch a token or because I want to make a quick buck. It's because I look at this technology as a means to an end, which in this case is building the best map in the world. Like, if it was at a different sector, he would have gone to a different sector. It just so happens to be this is the right place to do it. So it's hard to find, but people like that are the kind of people that we want to back.
How do you think about the pathway to liquidity, and what sort of guidance do you offer to potential investments and portfolio projects?
It's no secret that one of the benefits of this market is, faster liquidity. And so if you look at the average, like company, early stage company, you're looking truly for it to get to scale. You're looking at like 7 to 10 year ride. And I think the rough kind of math on cryptos, you probably can cut that in half. And so um you get to liquidity faster, and then but then you still have these questions of like, you get to potential liquidity, but should you, like, we have a very long thesis in Solana. I mean, there is a real case to be made if you look at their performance, that you should not probably sell Solana for quite a long time, because if you look at its ability to be a leading blockchain, there's a ton of growth ahead of it. So you have the opportunity for liquidity much sooner, and then I think you have to make the right decision based on, as a fund manager, at least, as how much liquidity do you want to distribute back, how much do we believe that this protocol or company has a much more long-term enduring value, and then you make a decision. But the optionality for liquidity over many years as a VC is incredibly compelling, because you can recycle it into new companies or existing companies. You can distribute it back to your LPs. You can just hold it.
How do you make, yeah. So how do you think through those decisions, right? After you've got a position that's liquid, like something like Solana, where, I mean, on most metrics, it's on par with Ethereum, but is, I don't know, 1/3 the market cap. So the bull case is relatively visible and clear. But then you're sort of taking a more liquid long bet. How do you think through that sort of bet versus something more early stage?
It can be challenging, right? I mean, I think in the case of that, ecosystem Solana, right? We're always looking at just the latest KPIs and metrics. I mean, I think Solana did like 1.5 billion in annualized revenue run rate in Q4. So it's quite the business. But I think, like, sure, we may be liquid, but we continue to believe in like just the fundamental upside, and that network is like a leading smart contract network over the next 5-10 years. Um, and you just need to, I think, internally be patient on just like continuing to see that vision through. And sure, you could get liquidity instantly, right? But we have a vision of where we think that's potentially going, and unless that changes, continue to try and hold on to that. I think certainly when you're just doing typical private market equity investments, like you things could be simpler, right? But that's kind of part of the fun of this market, or the fun and challenge of trying to balance that.
I feel like in traditional venture, there's this like unnerving desire for liquidity, and maybe in crypto, things become too liquid too quick.
Yeah, but I think many things that may appear liquid in crypto actually aren't as liquid as they appear to be, right? You've seen the whole like low float, high FTV meme, of
Yeah.
course. And if you look at the volume on a lot of projects, it's quite low. And so, like, potentially you could liquidate a large percentage of your position, but I mean, it's a bit harder, I think, than folks probably realize.
A severe
Yeah.
discount if you want to do that. So it is a bit of a interesting game. I mean, look, on the Solana thing, Mark had mentioned some of the numbers. If they did 1.6 billion in run rate end of Q4 last year, we were actually looking at some numbers. If you look at it, Q1 numbers aren't out, but I'm sure you can see them on chain. If you look at it year over year growth, that's like 30x growth in revenue from 23 to 24, and that's like at a 50-ish 50 plus revenue multiple. So if you wanted to look at Solana as like a SaaS company or a software company, like that's not that crazy of a multiple.
Hmm.
If you look at some of these AI companies and what they're trading at, um, relative to their growth, you look at Solana and you look at what is we think a market leading position, and then every single trend going back to NFTs, deepens, memes, AI agents, like they're all being built on Solana. I don't think that's a mistake. I think that's because it's the most performant blockchain right now, and so that leads us to believe that that's a long term hold. And if things change, we will look at the market then. But crypto is great because you have that flexibility. It also makes it harder because you can second guess yourself all day long, and you're never going to perfectly time a market. But we generally, you know, try to buy low and generally try to sell high.
How do you feel like the landscape for more centralized plays, so maybe infrastructure, um, centralized crypto financial services companies versus like projects? So I guess like equity based crypto operators and more like token based projects.
I would say when we're when we're taking pitches and looking at new companies, like, I think we're only investing in something that's pitching a token if we like fundamentally believe the use case for a token makes sense, right? And that might sound sort of obvious saying out loud, but I think like a few years ago, like many companies are just taking the approach, yeah, sure, of course we'll launch a token. So I think it's highly like case dependent. Um, and we'll invest in those companies, and then similarly, like we'll also invest in equity only businesses that are either selling software or some other picks and shovels for the growth of the industry. I think we're at the end of the day like ultimately agnostic on what those are, just so long as that the founders have a perspective on where they think like that value will accrue over time. Um, I would say we're probably at a point in time where I think we're don't need to keep funding too many infrastructure projects. I think like it feels like a lot of that has been built out in a relatively sufficient manner over the last couple of years, and so I think we're more so focused on like either like application layer or not to say we won't do infra, but I think like we're trying to push forward for new use cases, not just sort of the next decks on another chain, stuff like that.
Yeah, that makes sense.
Frank, on your point on centralization, I would say, you know, we were looking at companies um, that are trying to build, like, I would say, open protocols, decentralized protocols for, real use cases, are on stable, institutional stable coins, the real estate market. Like, we think there's a lot of really interesting stuff that just, you know, would would be better served in a in like a open protocol than there are with a centralized financial service in the US that deals with the 9 to 5 banking hours, that deals with some of the counterparty challenges around offloading loans and everything like that. Like the market is getting way more receptive given what's happening in the government. But with that said, still the like glacial pace by which the financial services industry moves is really painful. So like we are trying to kind of get outside of that as it
Yeah.
relates to opportunities.
Yeah, yeah. To your so like yeah, you're both making similar points. Like to Mark's point, it's almost like that market is saturated, not maybe oversaturated, but like its needs are being met with enough providers. And then to your point, there's just more appetite for some of the DeFi services that are comps to those CeFi
Yeah.
services. Well, like, do we need another like crypto or excuse me, Robinhood, Coinbase competitor? To your point, we don't necessarily need another DEX on a XYZ chain, but probably is still more room for certain types of applications there.
We're seeing some really cool stuff like in real estate or real world assets that we are looking into that I think doesn't really fit into anything that we've seen before. And so we think there's going to be some really interesting things that come to market. And I mean, it is, if you're a US based entrepreneur building in this market now, it's like, I mean, compared to like October of last year, you're like a whole different mindset, like in terms of like the ability to build here, be an honest actor, not have to worry about, being viewed as a criminal, like all these things that honestly were just so, were so suffocating for anyone in this market that wanted to be based here in the US. And that's all changed. And I think you're going to see some amazing innovation coming in the next 12 months. I mean, we're seeing it in our deal flow right now. So
How is it manifesting in the deal flow?
we have entrepreneurs that we've known that were either working on something that they've now pivoted into something that's much more interesting in the US. We've just seen a lot more energy coming from the entrepreneurs here. Without going into details, we had a founder who I could not eat, who had honest actor, business had a token. uh, I could not talk to him except on the phone about the token because of the kind of the paranoia around just how the government was managing everything. So like all that is kind of evaporated. And so I think what you're seeing is just a much better environment. Now the government needs to kind of get out of the way now, stop making announcements every week and let just like the builders do the building. But I'm very grateful that like the receptivity is here.
I know it's like no more tariffs, please. I think the short termism of macro kind of easily allows market participants to forget how big of a shift we experienced over the last quarter, in which the ability to build in crypto was made an order of magnitude less scary and dangerous from a regulatory perspective. But the change is real. I mean, I see so many founders now building in the U.S. without fear of reprisal. What advice would you give to founders navigating this type of market where they've got something serious, but so much of the attention is drawn to Melania coin?
I mean, I would say like irrespective of the category we're investing into, crypto or not, like we're always trying to find founders that are focused on building long-term projects, right, over the next like decade or two. Um, and while I think short-term is, or like crypto does attract a bit of short-term thinking, um, we're always trying to find people that are like long-term oriented in the first place. And I think just like setting aside the sort of tell them to set aside the day-to-day fluctuations on their Twitter feed and what, what the White House is, I guess, spurting out on a daily basis, and just sort of maybe have the mentality that like, hey, we're heading in the right direction long term from like a macro and regulatory perspective. And you're working on a seed or Series A stage company right now. Like you don't really need to don't be too focused on what's going on with asset prices right now and the broader market. Like you got a long way to go until you get there. So I just think like trying to remind them just to stay focused on the broader vision.
Uh, and I would say, like, we do this thing when we invest in companies where we kind of like do this very collaborative, almost like a welcoming to M13, and we do a bit of like I hate to use the term onboarding, but it's like a very collaborative discussion where we go through like key milestones and like how can we as a firm be like in support of these key things, and they're not. Sometimes there's some token stuff if there's a token around distribution and all this, but it's really more about the company building stuff. And sometimes it's a little jarring to some entrepreneurs because they're not used to like getting those kinds of questions. And so we're looking to find a unique kind of founder who is like obviously human in that they'll see their tokens and the values go up and down, but understand that's just part of the game and that they're playing for something bigger than that.
So looking to the next 12 months, next year or so, what's next for M13 in the crypto space? Any particular themes or sectors about which you'll be paying a lot of attention to?
I can take that. I think there's a few specific areas that are of interest for us right now. We mentioned the deep in space a couple times. Businesses like HiveMapper. In addition to that, like we've invested in IONet, the compute marketplace, another business that we'll announce soon in the energy space. I think we're just continuing to be excited about businesses that are using crypto or tokens to like fundamentally change the cost structure and business model of real world physical infrastructure networks. So that's a market we'll continue to spend time on. Beyond that, like we always get excited by just interesting consumer applications, both in crypto and not. And I think there's like a ton going on in the consumer crypto world right now. We've done a handful of things in the space over the years, like Step In, as we talked about earlier, Karate Combat, the on-chain combat sports league. I think like we're always looking for other like interesting kind of on-chain consumer businesses that have, I think, real PMF and traction. Like I think Karate, as one data point, had like over 100,000 users in their last fight a week or two ago. So there's some interesting precedent for just good adoption in the consumer space. And then Latif alluded a little bit to this earlier, but like just stablecoins, I think is too big of an area to not be spending time on right now. And there's a ton of good PMF in that space. Like the stablecoin market's like 200 billion market cap right now. But there's tons of areas of that stack, I think, to continue to that need to be built out. And so we'll be spending time there. Those are probably the main ones.
I'd also add we're excited by like people that are figuring out how to do crypto on mobile. And meaning like right now, we're seeing a lot of innovation in the AI space around like just UI and UX and like how you interact with AI, which is like almost ephemeral, and that like you've got these like windows that like pop up on your phone and they go away as you are getting prompts and getting answers or getting an agent to do something for you, where like it feels like maybe we're getting to the end of the apps and the app stores. That would be very exciting because I think that's been one of the big things that are holding back the crypto market, because super advanced technology, but like so much of it you gotta go sit at your computer to do, which isn't like where the world is. And so like that's why I'm so impressed with Solana and the fact that they put out this phone, and even if it's just a big large experiment that is like a crypto native phone, that's just really really interesting. So what's the future of mobile optimized experiences, and like how is crypto going to engage with that? I think is super super interesting, and we're looking for people that are working on that issue.
Yeah, well, I think honestly, everything's going to go to voice, right? We're going to be doing a lot less and a lot more just speaking to our AIs, multiple AIs, and having them do our bidding.
absolutely.
And then one day it'll just link right up there.
I mean, the machine should be using crypto to be sending value to each other. It makes no sense to be sending dollars, and it just that world's really far away. If you think about like how hard it is for our banks to KYC us, imagine trying to KYA, know your agent, KYC your agent. Like
KYA.
it's got to be through it's got to be through smart contracts. So like we're also very interested in that intersection. We've seen some really interesting companies working at that convergence of like who's really figuring out how agents can send crypto
Yeah.
to each other.
Grok just launched a token a couple days ago.
Really?
There's some crazy stuff going on.
Are we buying? Drop the ticker in the chat.
I forget what it's called. I'm not going to make any investment recommendations on the podcast.
Honestly, I feel like I have so many times. But we have a disclaimer, I think, still.
There we go.
We have a very good lawyer here at the block, and she made us write a very nice disclaimer. Nothing on this show is financial advice. If anything, it's not even informational. It's just whatever's just going on.
Whatever you hear, do the opposite.
Yeah,
Philosophical.
George Costanza your way through life when listening to this show. I've been buying. So honestly, like if I'm either going to get some great entries and get to retire a few years early or round trip right back to 2017. It's going to be one or the other. One or the other.
There's this common thing of if it kind of makes you a little sick when you hit the buy button, you're probably doing the right thing. Like, there was a period of time people forget in March of 20 when the world was ending that Solana, putting aside the long-term prospects of Solana at the time was 100. We bought it was a phenomenal opportunity, but there was these event-driven things that people can take advantage of if they believe in such opportunities.
100%. I think that's well said. Gentlemen, thanks so much for taking the time.
Thank you, Frank.
Thank you, Frank.
It's been a pleasure.
Pleasure was all mine. We'll talk to you both soon.
Bye-bye.
Auf Wiedersehen. Mm-hmm.